Definitely the economic transformation programs that we are seeing and the diversification. I mean, the diversification away from oil has been playing out in the GCC for so long, especially in the UAE and Saudi Arabia. And this is actually the base for all the performance that we have seen in the capital markets on both legs, the equity and the debt side. Definitely the equity side outperformed big time as you'd expect. But this is being played out, and the question now, given what's happening on the global market side, is what will happen to these plans, because the economic diversification and the population growth and the rising number of expatriates and everything that we are seeing on the positive side has boosted the aggregate non-oil demand in Saudi and in the UAE. And this was reflected in many sectors like the consumer stocks, banks, mortgage, everywhere. We prioritize coverage based on the client's interests. So our clients are all institutions. EFG Hermes is known as one of the, we have the highest market share in terms of the foreign institutional flows into the region in general. Liquidity in Saudi, but we have available liquidity in the banking sector in the UAE, and we started to see cross-border funding between both countries. Some of the UAE banks are very active now in the project financing and the syndicates in Saudi Arabia. This will continue to happen, and it will create a lot of opportunities for banks in both countries. Regulatory reforms coupled with the domestic demand change in demographics is very positive. Maybe it could slow down at some sectors, but it will continue, and this is the main theme in the region. If you have this opportunity, and if you have the investment landscape at a lower risk, at least from a currency perspective, I think this will just be very positive exposure for all the emerging market investors. And after the dust settles, I think the weight of the investments in the region compared to the emerging market indices will just go up, not down. From a pure research perspective, we don't pick up companies for IPOs, but we value them and we give them our opinion. So basically what happens is that we look at our clients' best interest, the valuation, whether it makes sense for our clients or not. And then we issue our report, we do our valuation exercise, taking into account all the fundamentals that could impact the cost of capital and the return, the expected return that this company can generate. And the second part is the fundamental and the governance of the company, the board, the management. So outside the valuation exercise, there are a lot of other important aspects: management, use of proceeds, growth, the sector. So it's always a top-down, bottom-up kind of analysis mixed together in order to give an opinion on the company. I think our research department and our research team is built on expertise. So we have, our team is based on sectorial experiences. So we have, each sector is headed by a sector head that has been covering a specific sector for years. Beside expertise, we have the corporate access. We're covering more than 250 stocks in the region. We have access to most of the, I would say 90% of the market cap of the region. We have access to. This is also very helpful in terms of doing the peers comparisons, taking views, insights, doing sanity checks to our assumptions and valuations and everything.